Guys, this is the S&P 500 weekly technical analysis for the week of March 4th, 2024. That is from March 4th, which is Monday, to March 8th, that will be Friday. And I'm going to start this S&P 500 weekly technical analysis with this, the news or this update, that is bubble. Last time we have seen the bubble in 2008 and there was a recession. And before that it was year 2000, a recession. Before that it was, I think, 91 or 92, again the recession. However, the important point is that the bubble, it is now confirmed. Earlier there was some speculation, but now the bubble is confirmed that there is a tech bubble. And in my pre-market update on March 1st, 2024, I've informed my community members that now, yes, it's confirmed that the US stock market is in a tech bubble, and this bubble is seen after 16 years, after 2008. Now there are two important questions. Number one, what will happen when this bubble will burst? Recession. Whenever there comes the bubble, it brings the recession. This means that earlier we were anticipating a correction. Correction means 20% to 25% decline. But now because the bubble is in the picture, that is why the recession, that is 40 to 50% decline. Now the second question is that can this be avoided? What? The recession, when the bubble will burst, then can the recession be avoided? Yes. There is only and only there will be just one case, only one case. And that one case is that if the economy and the consumer demand and the supply, if this thing, this equation, if it sustains as it is sustaining as of now, in that case we might not see a recession. In that case we will simply see a correction. Correction means 20% to 25% decline. This will happen. This is what we know. The correction is the best case scenario. Point number 3, when this bubble is going to burst, no one knows when it is going to burst. And yes, one more thing, this bubble is not just a tech bubble. This time it is a combination of tech plus debt bubble, DEBT, debt bubble. So if you have subscribed to my YouTube channel for last many months or so, then I've discussed the debt bubble. Okay, before the tech bubble, okay, it was seen. So no one can predict and no one knows when this bubble is going to burst. Anyways, what will happen or whatever is going to happen, okay, I will keep you posted. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if also you are looking for these the daily and the precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. Weekly chart means the big picture. Okay, and the actual problem is on the weekly chart. On the daily chart we might not be able to see that much problem or that kind of problem, but the actual problem is on the weekly chart. Okay, point number 2 of the agenda is the S&P 500 technical analysis on the daily chart. So just like weekly chart is the big picture. Daily chart means that the short term picture for a week or for 2 weeks or so. Okay, through the technicals I will show you, okay, this is the technical configuration, how much it is bullish or how much it is bearish or so. Okay, and we will also use this to deduce the trend for the next week. The third and the last point of the agenda is the probable movement of the S&P 500 from March 4th to March. So here I will tell you what is going to happen in the S&P 500, how it is going to happen, where it is heading to in this the bullish side, and what will happen in this the bearish side. And whatever happens here on the day-to-day basis, I keep my Patreon community members posted that see, this is what is happening and this is how it is going to impact the movement of the market. This will be the lower limit, this will be the upper limit, this will be the tiebreaker, and what is most likely going to happen and how it is going to happen, right? So I will discuss that in the last point of the agenda. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And also if you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis on the weekly chart. This is not the weekly chart, this is the monthly chart. M as in month, monthly chart. The thing is that in the beginning of the video, I have mentioned that there is a bubble. There is a bubble. Okay, and this bubble, this time it is tech bubble. Okay, tech bubble plus debt bubble. DEBT, debt bubble, tech plus debt bubble. Okay, that is why this is very very unique, and this was almost this was never seen. I think something like this it was seen back in 1927. Okay, when 27 or 29, when we have seen the Great Depression, that was there for 10 years. Means for 10 years continuous decline in the economy and the stock market. But then at that time there was World War II in 1939 or 1940, and because of that World War II, the US economy, okay, it came out of the 10 or 12 years of Great Depression. Okay, so something like that. Okay, it was back then. But however, in the current scenario, okay, a depression is least likely. So the purpose of showing you this, the monthly chart, is that whenever the bubble burst and whenever there comes a recession because of the bubble burst, then what happens? Every time the S&P 500, the Dow Jones, they come down and they hit their 200-month moving average. So the S&P 500, okay, during that the recession will be coming down to its 200-month moving average. That is somewhere around 2,700 as of now. Okay, and if you compare, so this is almost like from the current levels it is 46%. Okay, so it perfectly fits the theory, okay, of the recession. Almost 50%, more than 50%, or around 50%. Okay, now guys, let's talk about the weekly chart. This is the weekly chart. Weekly chart means one candle represents 1 week. Okay, not 1 day or 1 hour. One candle means 1 week. So the close, okay, number one, the candle is a good or heavy bullish candle. Clear, very okay, very much clear. The closing of the candle is almost equal to the high of the candle, and the same thing is seen on the daily chart, 4-hourly chart, and the lower level chart. That is why we can say there will be a potential gap up open on Monday, or irrespective of any open and initial bullish movement on Monday. Okay, clear? So this is through the candle. Now let's see what the technical indicators are saying. So our technical indicators, you can clearly see there is a unidirectional movement. Okay, no break, nothing. So extreme FOMOing. Okay, so a clear fan out, moving averages, and Ichimoku cloud, and all of the technical indicators are saying clearly bullish. Other than that, MACD is bullish, stochastic RSI is bullish, everything is bullish and bullish. On the weekly chart, S&P 500 is 100% absolute bullish, as well as absolute overbought, and absolute saturated. And so I have given you the same example, the Nikkei, Japan's, okay, index. So Japan economy is going down, okay, it is going heavily down, and its index Nikkei, it is going heavily up. Every day, okay, it is making new all-time high levels. Okay, so there is clearly a disconnect. The similar disconnect, okay, in some manner is okay, it can be seen in the US economy or the worldwide, the same situation, the same picture. Japan, okay, Europe, Asia, okay, US, the same thing. Now let's see what is happening in the Dow Jones. And once again, guys, this is the technical analysis of the S&P 500 and not of the Dow Jones. However, we look into the Dow Jones, okay, just to take a reference, okay, to check or to confirm that whatever we are seeing in the S&P 500 is true. Okay, that's it. So in case of the Dow Jones on the weekly chart, the same situation, the same picture is there. Okay, it is also 100% absolute bullish, absolute overbought, absolute saturated. So this means that there is extreme FOMOing, okay, and this FOMOing is expected to continue. Okay, and the market, if it wants, then it can move up, not a problem. But there is no substantial base. Okay, this is what you must remember. There is no substantial base, okay, because of which the market is moving up. Anyways, guys, whatever will happen or whatever will be happening, I will keep you posted through these daily and the precise updates of the S&P 500 on the daily basis. And if you have not yet joined my Patreon community, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And also, guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And guys, there is one more thing, that this is my program, Stock Market Knowledge Transfer Program. Through this program, I teach the movement, hacks, strategies, trend analysis, manipulation, technicals, predictions. Predictions means even before the things happen, support and resistance levels, and much more. And the motto of the program is to help you become self-reliant. And this program is delivered one-on-one, and And this is my email address. Whenever you want to participate in this the program, you can simply drop me an email. And more details are there in this the Google spreadsheet. When you open the Google spreadsheet, then you will see that all of the details are there in this the Google spreadsheet, including the terms and conditions, the recent snapshots and everything. So guys, whenever you want to participate in this the program, this is my email address. You can simply drop me an email. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And in this, the second point of the agenda, I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. So daily chart means one candle represents one day, not 1 hour or 1 week. One candle means one day. The last candle formed on March 1st, Friday. It's a heavy bullish candle, clearly a heavy bullish candle. Closing of the candle is almost equal to the high of the candle. Okay. And through some other factors, we can say that there will be a potential gap up open on Monday. And irrespective of any open an initial bullish movement on Monday. Okay. Now, I will not confirm this 100%. Okay. Also, the same thing we have seen on the weekly chart, and the same thing is here on this the daily chart. Okay. Although there are like 70-80% chances that this will happen. Okay, but not 100%. Why not 100%? Because on the weekly chart, okay, it is absolute saturated and absolute overbought, and it is heavily unstable. Okay, so that is why technically it should give a gap up open or irrespective of any open and initial bullish movement on Monday, but still we have to consider these factors. Now let's talk about the technicals. Technicals, okay, very simple. Technically, clear fan out, moving averages, Ichimoku and everything. Okay, MACD is bullish, stochastic RSI is also bullish. And one more thing, if you notice here, that there was very much up down in the MACD, and the similar up down in the stochastic RSI. Up down means sometimes there was a bearish crossover, then bullish crossover, then bearish crossover, then bullish crossover. Okay, this clearly indicates that market is trying very hard to sustain. Okay, and that is why we are seeing that there is means momentarily, okay, that there is some pressure. Clearly some pressure is seen in the market. Okay, and because of that pressure we are seeing the bearish crossover in the MACD and also in the stochastic RSI. But then there comes a sudden or heavy movement through Nvidia or Microsoft. Okay, primarily through Microsoft. Okay, then Amazon and Apple. So because of that heavy movement, okay, the market moves up, and then there comes a bullish crossover. Then comes the pressure, and then there comes a bearish crossover. So this the MACD. Okay, just let me show you the, okay, this is the MACD. Now if you notice the MACD here, very fine, very clear, MACD is just moving up fine. Okay, it was about to hit, okay, moved up, sustained, and then it clearly came down. Then we have seen, okay, up, then down, breached, remain below, and then again breached. So this means that in last 1 week, one week or last 2 weeks, okay, we are seeing some heavily or some very abnormal movement in the market, very abnormal movement in the market. And this, okay, and this can be clearly seen or confirmed, okay, through the MACD, because generally the MACD, it gives very good or very clear movement, okay, as I have shown you here. And this is the same thing, this is a similar thing, okay, I mentioned, okay, again and again to my Patreon community members. Okay, and these are daily updates that see this is happening and this is how it is happening. Okay, and because of that, what we can anticipate that what will be this the upward limit, what will be this the downward limit, okay, what will be the condition of the profit booking, and what etc. Okay, what will happen. So as of now, on the daily chart, S&P 500 is 100% bullish, 100% or absolute bullish, as well as overbought, as well as saturated. Clear? Now Dow Jones. Okay, the same thing is there in the Dow Jones. Okay, same thing, but Dow Jones is the MACD of the Dow Jones is still, okay, if means this the MACD is still quite clear as compared to the S&P 500. Now unlike S&P 500, S&P 500 is 100% bullish, but the Dow Jones is still 60% or 65% bullish. Why? Because the MACD of the Dow Jones is still bearish, and this is exactly what I mentioned in the last in the previous S&P 500 weekly technical analysis. If the Dow Jones remains weak, or if the MACD of the Dow Jones remains bearish, in that case any more bullish movement is going to see some or is going to face some struggle. Okay, so that is the same thing that we are seeing here. However, its impact is not yet clearly realized on the S&P 500. Okay, but it will, because all of these are indices. Okay, they are connected to each other. So this is the case. And if you notice, okay, on this particular day, this was February 29th, we have seen that the S&P 500 moved up to 5105 and it came down to 5062 on Thursday. And you'll be surprised to know that in my first update, okay, which is published around 10:30 or 10:40 a.m. Eastern time, just 1 hour, okay, after the market opens, I have cleared each and everything that now, because the first hour there was a dozy, okay, and because of this dozy, okay, and there was also, and this, the condition was cancelled, okay, the open equal to low condition. So because of the dozy, because of this condition, and also because of my strong support and my strong resistance zone, now we were anticipating the movement, okay, for the first half, okay, and then in the entire day to be in between these levels. So in the bull side it missed by I think 3 points, 2, 3 or 4 points. Okay, in the bearish side, okay, it was missed by 5 points. Okay, 5 points, okay, or so 4, 5 points. And this is not just the one case. Every day, okay, we know that what conditions will be applicable for the bullish movement, what conditions will be applicable for the bearish movement. Okay, where will be the tiebreaker, what will happen if it sustains here, what will happen if it sustains here, which level is going to act as a strong support level or a strong resistance level, and these levels change, okay, every other day. Other than that, the moving averages, okay, they also play, okay, a very, very important role. And guys, it's not just about, okay, these are daily and the precise updates of the S&P 500 from Monday through Friday every day, but also I give the stock market opportunities in the premium stocks of the US stock market. So guys, if you also want to join my Patreon community and also want to get these daily and the precise updates of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. You can follow that link, and when you will follow that link, then you will see that this is my Patreon profile and this is my Patreon page. And on my Patreon page, there are these the 2 tiers. This is the daily S&P 500 updates for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents. So whenever you subscribe to either of these, you will be getting the daily S&P 500 analysis, updates and the probable movement, and also the stock market opportunities in the premium stocks, minimum 5 to 10 every week. And guys, if you notice that many people have joined my Patreon community for last many days, weeks, months or years, and also they are getting these daily and the precise updates of the S&P 500 from Monday through Friday, as well as the opportunities in the premium stocks of the US stock market. So guys, whenever you want to join my Patreon community and you want to get these the daily and the precise updates of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here in this, the last point of the agenda, I will give you the probable movement of the S&P 500 in the coming week, that is from March 4th, which is Monday, to March 8th, that will be Friday. That in the second point of the agenda, okay, I've shown you that the MACD and the stochastic RSI, okay, they are struggling to give a linear or a clear movement, either in the bearish side or in the bullish side. And this has happened specifically, okay, in last week, okay, and this started to happen from somewhere around here. This started to happen, okay. This means that something is not right in the market. There is extreme FOMOing, and people are thinking that they will miss out this opportunity if they do not buy, and the market is going to move up and up. This may or may not happen, okay, because this is purely FOMOing. This has no technical or no logical, okay, relevance to this, right? And this, the extreme FOMOing, okay, markets, there's the condition, okay, to move up. This can clearly be seen through the MACD of the S&P 500. However, in case of the Dow Jones, the MACD is still a bit linear or a bit clear, but or me, I'm not saying that it is in a very good shape in the Dow Jones, no, but it is in a better shape, okay, as compared to the S&P 500. This means S&P 500 is getting heavier, okay. And the bubble and whatever I've discussed, okay, in this S&P 500 technical analysis, okay, this means that means again we cannot speculate when that is going to happen or when that will burst, but definitely something is not right, okay. And technical indicators are clearly showing, okay, this thing. So MACD and stochastic RSI. Number two, um, Tuesday or Wednesday, I think it will be Wednesday. The JOLTS job opening data will be published. Number three is either it is Thursday or Friday, non-farm payroll data. Okay, it will be Friday, not Thursday, it will be Friday. Non-farm payroll data, okay, it will be published again. Now the most important is Wednesday and Thursday. Wednesday and Thursday, the Fed chairman is going to testify to the Senate and the Congress. Okay. So yes, Wednesday will be crucial and it will be critical, because on Thursday he's going to repeat, okay, whatever he's going to say. This means that Wednesday, okay, it will be very much clear, okay, what the Feds are thinking, okay. However, the FOMC press conference is scheduled on 21st of March, okay. But because the this are testimonies there on Wednesday, this means that most of the things will be very much clear, okay, on Wednesday, because last FOMC was there, okay, on 30th of January, 30 or 31st of January. Since then we have seen very good reversal in the CPI data, very good reversal in the PPI data, and recently the PC and core PC data, okay, they were also against the market. So recently whatever the data was there, it was supporting strong economic activities, okay, but at the same time it was against the stock market. Anyways, whatever will be there, it will be quite clear on Wednesday. And if you are my Patreon community member, okay, then please make sure that you are available on Wednesday, and I will give you these updates, frequent updates, okay, when he will be testifying to the to the Congress. I think Congress first, okay, then on Senate, okay, on Thursday. Anyways, let's not speculate, okay, what he is going to say, what will be the impact, okay, because these are the things which are beyond our control. So let's focus on the technicals and the numbers. So for now, the thing is that for any more bullish movement to happen in the S&P 500, the Dow Jones must come out of this the condition, because the MACD is still bearish, the stochastic RSI is flat. The MACD must turn bullish and the stochastic RSI should also go bullish in case of the Dow Jones, so that Dow Jones can move up, and when the Dow Jones will move up, the S&P 500 will be able to move up, right? So this, the unidirectional movement in the S&P 500 does not mean that it will keep on moving up and up. And Nasdaq can do so, because Nasdaq, okay, it is primarily driven by Microsoft and Nvidia and others, okay. But the S&P 500, okay, still Apple, Amazon, okay, and there are many other companies, okay, 500 companies, okay, from different sectors, okay. They still make some impact, not heavy impact, but some impact, okay. So if Nasdaq moves up by 2%, then S&P 500 moves up by 1.3%, and the Dow Jones moves up only by 0.8% or 0.7%, right? So this is how these indices, okay, they are interconnected. So this means that a bullish movement in the S&P 500 can happen, okay. I'm not denying that fact, it can happen, because extreme FOMOing is still there. Extreme FOMOing is still there, right? That is why more bullish movement can happen, okay, not a problem. But again, the bubble, now it is officially in the bubble, okay, so that is also clear. A recession part is also clear, okay. For more bullish movement to happen, the Dow Jones must move up, and the MACD of the Dow Jones and the stochastic RSI of the Dow Jones must align bullish. This is the only case when we can anticipate more bullish movement in the entire US stock market. One more thing, for more bullish movement to happen, the Dow Jones must clear its recent high 39,282. It must clear its recent high and must close above its recent high 39,282 for more bullish movement or for a little more like short term bullish movement for 1 week or so, for 2 weeks. Okay, this kind of bullish movement to happen, this must happen. This is the condition. Okay, this is a technical and this is a logical. Even if we forget about technical, then this is a logical condition. This is how the stock market works. Okay, this must happen. This means that as long as that condition is not fulfilled, any more bullish movement in the S&P 500 will be very much limited. Very much limited to, okay, as of now, see, I have my own calculated levels which I give to my Patreon community members. Okay, so you can say like somewhere around here means not much. Okay, like within 1%, within 1%, as simple as that, within 1% from the current levels. Okay, that should be the maximum the S&P 500 can go. Okay, unless the Dow Jones lands its support, means the MACD, okay, and the stochastic RSI. Okay, otherwise not. Okay, this means that yes, as of now, okay, this will be the bullish movement. Okay, it will be moving up further. Now other than that, yes, there is a very heavy, extremely heavy resistance level. Okay, around here, somewhere around here. Okay, we have to see how the S&P 500 performs at that level, because if it fails or if it gives 2 consecutive closings below that level, it moves up, hits, fails, gives 2 consecutive closings below that level. In that case, okay, something like this or something like this or something like this will be there. This is there in the bull side. Okay, let's keep a simple number, 5,200. Okay, I'm not saying, okay, this is a hypothetical number, this is not my calculated resistance level, this is not a logical or this is not a calculated number, this is just a hypothetical number. Okay, for your reference. Okay, nothing else. So let's say upward movement. Okay, like this. Now this yes, the downward movement. For the downward movement to happen, okay, the S&P 500 must clear 5048. 5048. Okay, I've disclosed this, the support, okay, in the previous S&P 500 weekly technical analysis, 5048. We need 2 consecutive closings below 5048, and this was the exactly same condition I mentioned in the previous S&P 500 weekly technical analysis. Okay, that as long as it is trading and sustaining above 5048, it will remain above 5048 no matter what. Even if it fails to move up, then also it will remain above 5048. Okay, it will just doing like up down, but it will remain above 5048. Okay, so 2 consecutive closings 5048. Okay, so this is the primary condition for this downward movement. Okay, or this is a short reversal. Before that, okay, there is one more very good support level. If the S&P 500 fails to sustain at that level, if it breaches, if it comes down, then definitely it will be coming down to 5048. Okay, something similar to what I mentioned, okay, on 27th and 28th. Okay, if it fails to sustain, then it will be coming down, okay, towards 5048. But because it is strongly sustaining, there is extreme FOMOing. This means that it will not be able to breach 5048. Rather it will see a reversal and it will move up, and we have seen up and then reversal. If it gives 2 consecutive closings below 5048, in that case it will be coming down. It will be coming down to what? Then in that case it will be coming down to this level, that is 4921. And now around 5048, many stop losses. Okay, just below 4921, many stop losses. Between 5048 4921, okay, there are 2 more heavy support levels which can help the S&P 500 to sustain. Okay, but once it breaches 5048, okay, then in that case these support levels might not provide that kind of support. Okay, this means that next week, okay, wait, from here to 4921, 4%. Okay, let's accept 4921. Okay, or at most this was 4845. Why I'm keeping 4 or 5%? Because on Wednesday Fed chairman is going to testify. Okay, that is why we need to keep some okay, these are good numbers, or some good room in both sides, bullish side and the bearish side. If he goes dovish, okay, in that case definitely the S&P 500 will be able to move beyond 5200, not a problem. Okay, even though extreme FOMOing, extremely overbought, extremely saturated, extremely unstable, but still with the help from the Federal Reserve Chairman, it will be able to move up further, not a problem. Okay, similar to the Japan, something is happening that the Japan economy, okay, it is nosedive. Okay, there is like it is coming down heavily, and its stock market is moving up heavily, sharply. It is moving up, making new all-time highs every day. Okay, so this is a clear indication of bubble. Okay, whosoever knows the stock market, they can clearly see, blindly they can, okay, they can tell that, okay, this is a bubble. Okay, that is why this time the bubble is not just in the US economy, the bubble is global. Okay, and if the bubble bursts, then there will be, you know, very severe consequences, okay, across the world, in all of the countries, because now in this the 21st century, especially in 2024, all of these the countries are interconnected or interrelated. Okay, means a lot of globalization is there. Okay, unlike 2008 it was different. If there comes no significant movement on Monday and Tuesday, in that case definitely be ready to see a movement on, in that case be ready to see the movement on Wednesday. So guys, if you have not yet joined my Patreon community, then you can join my Patreon community in order to get the daily and the precise analysis and the updates of the S&P 500 from Monday to Friday, and also the stock market opportunities in the premium stocks of the US stock market. And guys, hit like if you have liked this video, and if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And also guys, if you have any questions that you want to ask, then please feel free to ask your question through the comment section. So guys, next week will be heavily volatile. There will be heavy volatility, especially on Wednesday. Just be careful. Okay, and now through the MACD of the S&P 500, we can clearly see that something is not right. So just be careful. Okay, I'm not saying that you cannot go bullish or bearish. You can trade bullish or bearish as you want, but just be careful. Okay, because now the market, okay, it is officially in the bubble. Okay, officially in the bubble, not just the US stock market but the global stock market. Okay, and these the economies, okay, and everything. So guys, once again, hit like if you have liked this video. And guys, this was my S&P 500 weekly technical analysis for the week of March 4th 2024. So that is from March 4th, which is Monday, to March 8th, that will be Friday.